I always try to do three things in every presentation. So the three things I'm going to do today are give you a little bit of an overview of what I call the myth of simplification. And then we'll do a little bit of a kind of teaser of kind of a survey around the world of a little bit what's going on. And then we'll provide a little bit of advice. So we work with a lot of fast-growing, technology-oriented businesses, and we typically see them go through an evolution and a curve. So we'll tell you a little bit about what that is and some advice about what you might want to think about. Before I do that, Worldpay is probably one of the bigger companies that you have never heard of. So to give you a kind of quick introduction to who we are, we're actually the largest payments company in the world outside the United States. And we're actually the largest payment provider in the UK. We actually have a couple of different businesses. We have a global e-commerce business. We also have a domestic multi-channel business here in the UK. You start to see our brand around a lot more these days because we used to be called Streamline at point of sale, but you'll now see the Worldpay brand there, including the coffee shop in the corner up by Old Street, I happened to notice this morning. Within the e-commerce world, we're quite unusual because we own our full product suite, so we do absolutely everything. We own our payment gateways, we are also our own acquirer, we have our own fraud products, we integrate to, I think at last count it was 270 different variations of alternative payment methods. We'll talk a bit more about those. And we provide treasury services as well. We are actually a large startup ourselves in many ways. We became an independent company in December 2010, so we are relatively young and immature as well. What we call the challenge of growth that I imagine many of you are struggling with is something that we are very similarly dealing with ourselves. So look, once upon a time, life was simple and it was good. Cash was king, and credit cards dominated the alternative way that people paid, and that was a relatively simple thing. Then along comes technology and globalization, and that actually drives all of a sudden a whole lot of choice, which throws up questions for both merchants, businesses, and for consumers as well. What type of payment methods will people want to use? What are the trade-offs between them? What should and shouldn't I do? So, what's kind of interesting then is if you kind of look at what every payment company in the world is promising you, including ours, by the way. If you look at Worldpay.com, everybody says we can make it simple. But I guess, for consumers that means something different, right? Consumers, actually all this choice can be quite confusing. We did a study recently which found that in mobile payments, which people tend to lump together as all the same, and are actually a proliferation of different choices, people are willing to think about using 2 payment apps on their phone. So, that actually throws up an interesting tension if you're a business, which one should I bet on, and what's going to win, and where should I go? So, often I think when people think about simplification of payments, actually, especially as technologists, you tend to gravitate towards, well, how easy is it to work with? What's the API look like? And so there's this sort of myth of payments that, making payments simple is about having just an easy API to plug into. Interestingly, by the way, this is one of ours, so I'm not taking a swipe at anyone. Is that really payments nirvana? Is that simple to take payment? And the answer is, for some merchants, in some businesses, it probably is. But for a lot of others, it won't be. So if we take a kind of quick survey around the world at what's going on. First of all, I said once upon a time, cards dominated. Cards will always be, I think, a meaningful part of the payment mix and somewhere in the value chain. But the balance is shifting. So a report by Worldpay last year found that while today's split is sort of globally is roughly 60-40 between cards and other payment types, by kind of 2017 that will reverse. So actually alternative payment types are the ones on the rise. I won't belabor the point because I think everyone is talking about it, but mobile payments are rapidly growing, although to lump that all together as just one payment type is obviously, as I said, ridiculous. And then, of course, fraud is on the rise as well. And I think there are a lot of pundits out there that are predicting that with the emergence of EMV in Europe, we'll see a surge in online fraud. I saw a quote from an ex-fraudster yesterday that I loved, which said, with the rise of omni-channel commerce comes omni-channel fraud. And I thought, that's an interesting idea. So the world is certainly changing. And I guess, we sit here in Europe and the US, and we still live in quite a card-centric world. But actually in other parts of the world, it's already not that way. So, if all you take is Visa and MasterCard in China, you're reaching at a maximum 15% of payment volume. And that estimate is actually probably a little bit on the high side. And then if you go to Latin America, just Brazil alone, it's less than half. And you've got payment types like boleto that pop up, and for merchants sitting here, it's like, what the hell is that? And then there are kind of some interesting outliers as well. So if we skip through some more animation, most people probably don't realize that the market with the highest penetration of mobile payments today is actually Kenya, although some argue it's Nigeria. And that's actually SMS payments more than anything else. So yet another variation on mobile payment. We talk about Western Europe as being a card-centric world, or a Visa and MasterCard-centric world, but the Netherlands actually is pretty hard to get anywhere without accepting Ideal. And then obviously we already talked about boleto in Brazil. So what's behind that? What's driving this? So I mean there are hundreds of factors, but I guess some things that you should think of and be aware of are some of the structural differences that drive changes or differences in how people pay. So we talked about Kenya and Nigeria. Actually, there you have a large unbanked population. You've got poor security. You've got relatively low internet availability today. So actually, SMS payments start to make a lot of sense. We talked about Brazil, where actually Visa and MasterCard is relatively poor reach versus something like boleto. You also see really interesting regional differences in people's fear of fraud and people's willingness to share and have their details saved. So we did a study very recently for the travel industry. We actually found pockets of places, and ones we wouldn't have expected, like Australia, where actually people are really uncomfortable with the idea of storing their credit card details. And that's a sort of fascinating and slightly random cultural difference. And then, of course, things like social status. So, will Apple Pay become a commoditized way to pay, or will it become some sort of sign of status and premiumness, the way that actually many cards are in South Korea today? South Korea is one of the big mobile payment markets, but actually, in terms of higher transaction value payments, people tend to like cards because it's one of the ways they show off their status. And then, of course, cost as well. So cost both to consumers, which drives their behavior, as well as cost to merchants, which drives what they might expect. So, if you're a business looking at card payment, there are a whole bunch of other factors that you have to think of as well. So, for example, where are you going to process payments cross-border versus domestically? The prevailing logic is that if you go domestic, it will be cheaper and you'll get higher transaction acceptance. You'll get more good transactions accepted by issuers. But actually, that's not always true, and it often has tax implications and implications for how quickly you can get your money, or in the cases of places like Argentina, whether or not you can get your money out at all. So it's actually not an easy question at all. Then there are issues of suitability. So actually, what are the right payment types for my kind of business, for my kind of product? We had an airline recently that told us they wanted to start accepting e-wallets in Russia, not really appreciating that the Russian government has capped the maximum transaction value on an e-wallet as something much lower than the price of an airline ticket. We have a video games customer in Germany that absolutely hates carrier billing, but actually it's the only payment type that many of their under 18 customers have. So when they withdrew it, all of a sudden their business plummeted. Then I alluded to it in sort of the local versus cross-border, but there are interesting questions about actually what payments mean for your liquidity. So where you're going to take money in as well as how you're going to pay money out, and what that means in terms of foreign exchange and settlement, cash flow. There are lots of interesting questions wrapped up in a merchant for that. And then lastly, the scheme rules. So actually, all of these payment types, not just Visa, MasterCard, have different and often changing rules. So if your business is a marketplace model, you should probably be aware of what's called PSD2, or the Payment Services Directive, coming down from Europe, which needs to be adopted by every EU country, which will actually mean that marketplace model businesses would have to become regulated payment entities themselves. And how many of them are even aware of that? I won't dwell on this because I think someone else will talk to it, but of course it's not just about the payment legislation. Actually, there are a whole bunch of other interdependent factors all acting on payments at the same time, not least of which is things like privacy and consumer protection laws. So I guess there are sort of three phases that we see to what a business like yours goes through. What we typically get is kind of in phase one, I'm a new startup, I'm in one country, that's really easy. Actually, that simple API looks really good then. I start to go to 2 or 3 countries, and it's actually probably okay. I'm probably going from the US to UK, vice versa. Chances are my payment company can come with us. Then I kind of get into this phase where all of a sudden I need to go into 14 or 30 countries next year. And actually all of a sudden then that complexity can become quite overwhelming and scary. And actually a simple API is no longer what making payments simple actually means. Then kind of as your business matures, the question changes from how can I just get into a new country really fast to, well, how can I eke out more growth in that country? Suddenly it matters not whether or not I take a payment type in China, but whether or not I take all the payment types in China. And then actually that's a way that you can drive incremental growth as your markets start to mature. And then lastly, kind of as businesses mature and growth really slows off, it becomes actually less about top-line growth and more about efficiency. So how can I squeeze savings out of my payment network? And how can I optimize to get the most earnings out of it that I possibly can? So finally, I guess, 5 sage bits of advice. First would be to put kind of payments actually at the heart of your strategy from the start. So often what we see are companies that realize too late that actually payments are a fundamental part of their strategy. We'd also advise that even if you sort of start life as a domestic business, think globally from the beginning and think about the world and how different people are, and the different consumer behavior that you can expect. And then of course the rules, and they're changing all the time. So you need to be aware of them and how they're going to impact you. And finally, and what is obviously a gratuitous plug for Worldpay, I'd think about the right partner who can guide you through this incredibly complicated morass that is only becoming more so, I think, over the next couple of years. Anyway, thank you very much.